Good morning. Some follow through to yesterday's reversal day. And let me get my crayons out here. All right. So yesterday, at the end of the day, in the room, we took a look at prior reversal days. And you can see this one here was relatively large. Well, it's a big bar follow through, but notice this one, how the big bar took out the high of the red bar. There was a little shock, intraday shock that happened as that moved up into this resistance and then got nailed back down again. This one, little follow through, but that was after the beginning of the move up. And now this one, up into this area of price resistance. So the supply directly to the left. And we did get a little breakout above that resistance. So a shock element to that. So now prices are, well, basically just under that bar's low. So it hasn't violated any significant support yet, which is down here. And of course, you have to wonder, will that happen ahead of the big inflation data tomorrow? Maybe hesitancy. So, I think just, with that in mind, thinking that, today may not really go much lower than what it is here, potentially just because of the hesitancy of that there would be much follow through. That being said, coming down into this support level down here certainly makes sense. Let's see what this is at. Yeah, so reversal day yesterday, breakout failure in an area of resistance. We talked about internals yesterday and the alignment of different things to have some type of corrective price action here. Now, of course, the inflation data coming out hot tomorrow is going to definitely put the Fed in a position of you have no choice. Well, we know that they're going to raise, but maybe more than what initially was thought. And so one of the things happening this morning is, agreed, Robert, but maybe they're going to do, right? The market is now pushing their face into what they created. I wanted to be more visually, verbally, but I hesitated there. So you see the 3-month here breaking out over this consolidation, which suggests the markets are saying you better step on the accelerator. Could they come out with a point tomorrow? And that, really forcing their hand to do something that maybe the markets don't want that much. I don't know. I mean, but I see this breaking out here, and that cannot be viewed as a positive, but the markets are afraid, of this thing, getting more out of hand, and they want the Fed to do their freaking job. And even if that means inflicting some pain in the short term to avoid what could be devastating intermediate term. And so with that happening, these yields moving, look at this. And what you see here, this is this data, right? Subtracted from this data. And, we talked about this in the past, how this led the way this was going down ahead of, the markets, which typically this goes down and reaches an inversion and the markets continue to go up for a period of time and then goes into, a bear market. So, this inched under this 0.50 heading down here. And, this is the difference between, I think I have this as the difference between the 5-year and the 10-year. I'd have to look, but in any event, you see it's getting worse. It's getting worse. And this one is going back toward inversion again. So the idea is, are we really going to have recession? The markets are saying, yes. And so, what does that mean? How bad does it get? The markets are down quite a bit. So if this continues and the Fed comes out, they do their job and all of that, eventually I think that leads the market down. And this is just a thought, of course, the low that was created in June is considered significant, having 3 pivot lows down here. But, so it could be a long way down to get there, of course. And then most of the time it breaks to low, but, we're getting a bit of ahead of ourselves. We'll see at the end of the week and that data out how deep this weekly bar gets into that prior bar or below it. And of course, if it gets closes below it, that's going to, at this high, it's going to give us a bias that it's going lower. Just like yesterday, we reviewed how it began to evolve, meaning how the markets began to falter after that initial push higher in the morning. And one of the things we talked about looking at different markets was the depth of retracement. So while it was a red bar, and one of my comments was, well, visualize this on a closing line chart. And as we look at this, we say, well, just going nowhere. But the breakout failure has a shock element to it. And it is a reversal bar. But, for the moment, how bearish really is it? Well, if you think about this in the point of view of a line chart, it's just no big deal. It's just going sideways. It's erratic and whipping back and forth. Whereas we go and look at the Qs, which led the way up, and we see that, it moved higher toward its destination and got rejected in a big way, and it retraced deeper into that bar, more bearish. And so now it's gapping below that toward the bottom of the prior green bar. So bearish, but it's on this pivot here, support. So while we're getting some follow through, it's not in a very big way. And we'll see what kind of jiggles, of course, happen here, but it opens up the door to coming down to where? Well, of course, you look to the left and see where's the next stopping point, that it might come down to, which would be down here. And should it move down to here, I suspect buyers will step up there again. Data tomorrow, who's so confident that it doesn't surprise one way or the other. So gives a lack of, real intraday commitment. But we do have a turning point now. And, based on this bar in this location, and we're going to see how far this goes, especially after tomorrow's data. All right, so it's gapping down here. We see it's on that support. We're assuming it's not going back up to the high. All right, let's look at the S&Ps. And so again, a little bit lower, but on a closing basis, not a big deal yet. 4060. I have 4065, Jacob. Because, but 4060 would be better. Again, assuming things follow through to some extent, and 60 would probably increase in premium at that point. See, so 65, a little more juice. And this is, why go higher rather than a no-brainer? Because the premiums aren't huge like they at some points in the past. So there really hasn't been this, increase in put buying yet. Right? One of the things we talked about at the end of last week that was a concern, that all of a sudden we saw an increase in call buying as this reached this resistance area. And I was like, okay, this location, what's happening, increase in call buying, odds are, this is going to get some kind of correction now that, option traders start believing in the rally at the worst possible point on the chart. And that's what typically happens. So as always, if we can get some follow through to the downside early on in the first, 15 minutes or so, the juice picks up and we can get a little further away. So, going down there to 60, 65, it's below the wide range bar and the support. So that should be a safe level. That just based on today, it wouldn't get down below that. It would look pretty nasty if it did. Business can wait every day. Well, George, if it's just the way it is. I mean, we can disagree with, with what people do on a day-to-day basis just based on news. I get it. But knowing you're primarily a day trader, um, you can get in and out. But when you're doing things and holding positions overnight and you got a big news thing coming out, it's like, do I really want to get ahead of that and take that risk? Some people do, they hold through earnings and all of that, but maybe they're hedged. But top side, I have 41.85. 41.85. And I think anything close, and I couldn't get above here, but anything close, to yesterday's high. And 90 is up there. Is there any premium up there? 41.90. Yeah. I don't know. This is. I'll look over here at the other one. Yeah, there's nothing there. I don't know. They're zeroing out the bid and ask here, but yeah, if there's anything at or above yesterday's high, should be fine. Should be absolutely fine. All right, other markets. Yeah, George. So intraday, we know Fed news is coming out. We step aside because it's going to get whipsawed. It's not like there's news every single day that moves the market. And it becomes a choice. I mean, Dan's been doing all of these credit spread trades with earnings coming out, and it's been working out really well. And there's a few that haven't, but he manages them, well. That's what he does. So I wouldn't do it because I don't have the stomach for it. But that's like the news thing, and do you do that or not? It's not a right or wrong. It's do you entertain that as trading, from a trading thing? All right, so this is following through. It's sitting on that pivot. Yeah, me too, George. Me too. Sitting right here on that pivot. So it's got plenty of a void to drop here down to the bottom of the wide range bar. So look, I think, and that would be a pretty big move. If this happens early on in the day, you got to be looking for at least a bounce. We look, intraday charts looking for some kind of a bounce if it goes down there pretty fast. But I think that would be the extent of any move to the downside today without stabilization happening. The Dow has been holding up here. You can see it isn't breaking below yesterday's low, but you see the same rejection bar there. So, bullish price action, which we talked about. You got a bottoming tail bar. They bought the dip. You got a 180 reversal, and now it breaks out above the highs and gets slammed. So, it's holding up a little better than the others, but tech is led the way up, and now it's starting to lead the way down. And that's what's supposed to happen at a turning point. Again, we'll see where this ends the day, and then at the end of the week, we'll see where that ends the week, and so on and so forth. Factory work. Russell was the monster mover yesterday. It got rejected at this high here. It's a deep retracement. That's positive. And now we'll see how far this goes. So, but a nice move, a little extended there, but it's, from looking at things from a broader perspective, to see the small caps doing this well and tech doing this well. And of course, the depth of retracement, it just, whatever correction comes, in the coming weeks, and of course into September, the worst month of the year, I think, it begins to set up potentially what I think should be, an intermediate term bottom. So even if it comes down here, toward this, maybe we get a head and shoulders type of a bottom. And so, so we got some short-term negatives and other very positives that should be positives intermediate term. All right. Bitcoin, we talked about its lack of participation with that rally. And so now, at this high here, this could be, again, one of the forces that drives the market lower. This begins to sell off down toward 20,000. So we'll be keeping an eye to see what that happens. So this starts moving down, tech starts moving down. We've got interest rates, break short-term, very short-term, 3-month breaking out, and, 5-year, 10-year. That's just kind of hanging out there. But, that's why we've got this yield curve moving toward inversion from a very long-term perspective. When we look at these, again, intermarket relationships that guide us to it right now of a bias that the market should start to pull back. We'll see how far. Now, inflation, oil broke down, and I think, just based on everything, wanting everything to line up, for this correction to follow through. I mean, this breakdown that occurred, this wide range bar, does this turn into a breakdown bar failure? The wide range bar, an inside bar, and then it takes out the high of the inside bar, which we won't know until next week. If this is retracing back up again, interest rates going up, tech coming down, maybe a little bitty perfect storm to lead into a September drop. Silver stabilizing gold. And what will be the noise in the media to distract the masses? Well, they're always, the more we listen to different opinions, the more we get distracted. But, you heard the news of the day today, which is pretty outrageous, but anyway, all right. I think that's about it for me. We'll see how today brings, and some follow through here. Short term, I think we have a bearish day unfolding. Obviously, we'll see how far it goes, and then tomorrow, I heard on the news. I look at these reports that come out from a point of view of, yeah, I know that one's a market mover, and then I hear on the news just before coming on here that, because the inflation point of view, this is like the biggest data point, in a long time coming, and what's going to happen and how it influences. But we'll see tomorrow. To you, Dan.
Yeah, exactly. It's whatever the media puts in your mind, and that's the theme of the day or the week. So yeah, we're starting to trim a little bit yesterday, tightening stops because of the turn day. We put on a call spread on Microsoft. We tried putting one on Amazon, just didn't get filled at our desired credit, but that still looks good to try to put one on today. What else? All right, any questions on opens, just ask, but let me go right to a bunch of gappers here. T2 is a favorite of mine for a call spread. I said, as we were going through earnings trades yesterday, I did about 5 of them yesterday. NVAX is going against me. That's the biggest adverse move this whole season. Intel, I lost a little on selling a put here. And then NVAX, I'll just manage. I got the 45s. But yeah, I'm like 90 that's only my second loss. Many have gone against me, so I would never say that. But even the ones that go against me, I get out at a profit because the move against me is not greater than the volatility crush. All right, so back to T2. This one I said yesterday, that this is not a pattern I'd want to jump in front of unless it might have been a way out of the money condor, like the 115s, 140s. Instead, I said, whatever way it gaps today, that's the side we'll play. So it's gapping down here. And so let's look and see if there's juice there at call spread. SYY. I guess they announced they might be doing some deal with Unity. So this is a call spread idea over 87.50 or higher. Not an earnings trade, but I just saw this thing going by. Tapestry, little retail stock, has earnings next week. This would be a pattern if it holds like this on the earnings that I'd sell the 31 puts into earnings. Nice, bottom. And that's the bet I make, that even if it gaps against me, it's not going to be catastrophic. QTR, but you know what I have been noticing this week? Let me go back to spiders. Back in here, I was saying the market was in a bullish mood, and I thought even negative earnings wouldn't be hurt as bad as if the market were in a bad mood. And now I'm flipping that. I'm seeing a lot more bearish gaps yesterday and today that are proportional. It's like, wow. I mean, look at this thing, 1650 down to 1050. I don't even know what this stock does, but that is a nasty downtrend. But the gap's too big for me. Meg L, recent IPO, it's down 20 bucks, 29 bucks. But I mean, this thing, that's so wild. Look at this, $60 to 260. Oxy, CNBC said, Buffett now owns over 20%. Reversal on major support. Let's keep an eye on that for put spread. Hub M earnings gapping up. I don't like overlapping bars this much, but put spread yesterday's low. APPS gapping down, no good pattern. Triple D had a profit warning. That's a nasty gap from a potential bottoming pattern on the weekly. NVIDIA came out yesterday, pre-release, sent the semis and the Qs in a little pre-market tantrum yesterday. And now MU's joining the pre-announcement party. And you remember these pre-announcements been going on for a while. Remember Walmart? EasyPN, it's earnings, but I can't tell where you're gapping. Sunil's asking in YouTube how much money is needed to play an option. Well, a spread, it's a spread with less credit received. Naked option, complicated rule, but it's 20% of the out of the money strike, less how far away it is. But if you have a small account, there's no way they're going to let you sell naked. So we have some people selling just one contracts on $2,000 accounts with just doing little tight credit spreads. Potential bottoming pattern, Delta Mike, but I don't like the way that came down, so no interest. Remember SDC? This is Smile Direct. Remember this IPO? Look at this, went up to 21 bucks, and now it's gapping down here. This gap down could be the death nail. If it goes sideways for a week and can't bounce, that thing might be headed to the graveyard. SKT. I only see one print up here. I don't trust pre-market unless it's liquid. Mara earnings gapping down, but no pattern. Actually, That was a nice little ascending triangle, little gap breakout. Some of these Bitcoin stocks have been doing really well. CBT, again, I don't see the gap, but kind of a bull flag here, 30-minute high. Varun gapping down to $2. But before the gap down, it was on my core long watch. Oh, Lemonade I saw today. Look at, so it's very extended on the daily, gapping up. So, you know, more of a short-term short. But look at this beautiful weekly multi-month pattern, 20 MA flattening out, closing breakout. Price void, that's exactly what I like. Laser up a little bit, maybe 30-minute high, maybe put spread. This says it's gapping down 650, but I don't see any prints. Blink 22.25. So that's a bear island reversal on earnings. That could be a short-term call spread. TAN, you know, this thing gapped up with the passing of that bill. I was short puts and I closed them in the strength yesterday. Charlie India up alarm. We have a put spread on that. All right, yeah. So when I hear bells at the open, that's a good sign because it means my profit targets are being filled on bids that I had put out, GTC bids. All right, so here's another nasty gap down. Look at that, 2 power bars. It was a potential bottoming pattern, but until today. And I don't think that's going to recover a gap like that in a while. So that's damaged. Sun W. I always got to see what I got filled on. All right, so Greg, here were 2 of my put spreads yesterday. Pergo and 3, so I just got out of 3 of my put spreads. All right, so Pergo, what did I have? 37.5 puts, way the heck down here. I just closed them at a dime. And S-Wave, S-Wave, I had the 180s under the 200. Just close that at a dime. But those gapped in my favor. Those gapped in my favor as opposed to showing you one that